Well, good morning. Happy February 27th. Wanted to share with you some more data and kind of insight on what's happening here in the Austin market. I'm going to start by saying we are in really weird times. I've told several clients Austin's kind of sitting on a knife edge right now. On one hand, I'm going to show you some data and give you some feedback that's telling us we're in a fairly okay spring market. Buyers are out, open houses are getting activity. There's some properties with multiple offers. Which again can be traditional in the spring market. At the same time, we're seeing some data start to really pour in that says there might be a wolf in the sheep's pen, so to speak. So I'll show you that. That's going to be interest rates right when we're about to hit the true spring market, which is March through, let's say, May. So I'm going to start with this. This is January data. We've just now gotten this in the last week. So the little X here is kind of showing us how January is wrapping up in terms of closed sales. We had 1,600 homes sell in January, which is the lowest number we've had in 5 years, lower than any month that we've had in the last 5 years. We kind of knew that was going to happen. Sales volume is price. Price is a little higher over the pre-pandemic years, but below the pandemic years in terms of volume on price. Why? Because we didn't sell as many properties. Here's median sales price. So we're sitting right now about $450 on median sales price. That puts us back to about April 2021 or September. They were kind of same on price. So whether you look at it as fall or late spring of 2021, we're kind of sitting there on price. We're still significantly above the 367 that we had at the end of 2020. So I see it's going to be very difficult to go back to 2020 prices, but we'll see where we end up in terms of the 2021 scale. But 450 is not that far off from where we ended last year, which was 457. So prices have started to kind of soften, but at a very slow pace. We're starting to maybe level off. Will really be interesting to see how February turns out. Average sales price, same story. We're kind of in the same position again where we were either late spring or fall of 2021. Total listings, right now we haven't started to go up. So the 2023 number of listings has not started to turn the corner and build back up again, which is part of the story. And I'll show you that data here in a second. But right now we're sitting around 7,500 homes on the market for sale at any one time, which is much higher than we had during the pandemic, but it's trending back just a little above where we were in 2019, for example. And so not too bad there. All right, so that's January data. We're going to come over here and look at February. So right now, February is this last line over here. The green is number of active homes for sale. The blue are the closed homes that sold that month. And right now, we're trending about 1,500 homes so far have closed in February, which really were January purchases. So January buyers closing in February. We're still below where we were in January, which were December sales. And what you can see, though, is right now we have a trend line down. It's very common that it trends. Usually we peak in May, and then that trend line goes down until about January, and then it starts to bell curve up. We have not started that turn yet. So there's some questions that I have. Number one, are we going to see sellers start to come back out the way they traditionally do in that March, April, May window? That's usually when the sellers have their homes ready. It's spring, the weather's warmer, and they start hitting the market. Number one. Number two, are we going to have buyers, even though the activity is good right now, is that buyer demand, that buyer activity going to stay warm through the spring enough to keep pace with the inventory that's coming out? Here's what makes me think we may have a wolf in the sheep's pen. So let's talk about interest rates. So in the last 3 weeks, the 30-year fixed rate mortgage has gone up almost an entire point. So I had buyers 2, 3, 4 weeks ago that were locking in rates in the low sixes, a few of my buyers in the fives, high fives for interest rate. If they call their lender today, assuming they're getting a traditional 30-year fixed rate mortgage, they're almost 7% now. Why? The bond market was making a bet that inflation had already peaked and it was starting to come down. The 10-year treasury was following that logic and was coming down. But then in the last 3 weeks, we have had a ton of data come out with the economy that says, whoa, inflation's not going anywhere. Like, it's still hot. The market's still good. We had a blowout jobs number in January. We had hotter than hoped inflation, a much better than expected retail sales in January. The PMI index, which is producers and manufacturers, that was the highest it had been in 7 months. So even though inflation may be coming down eventually, it's going to be this rocky road down. And what's happening is the Fed, which is the one raising the Federal Reserve rate, which banks trade on, the Fed is saying, hey, we're not going anywhere. We're going to keep raising rates until we can really see inflation come down and be sticky. So what's happening is it's forcing these long-term notes, 10 years, 30-year fixed rate mortgages, things like that, to go, whoa, we're not charging enough. We need to get a higher rate because inflation may be sticky. So what's happening is, right when we're heading into the spring market, right when we're getting all this good activity in the market, is this going to start putting downward pressure again on buyers? I think it will, to make the kind of bids that they would want to normally make on a house. Is it going to take some buyers out of the market? I don't know. But what's going to be interesting is we were starting to finally maybe chew up some of that inventory that had built up in the fall and the winter. Right when we're hitting the spring market, when I think we're going to get some more sellers coming out, is this going to put downward pressure and let inventory build back up again, which is going to suppress price? And so I don't know. I really don't. I think this is really interesting to watch. I talked with several agents this weekend. Open houses were good overall. If for the new homes, okay, not the ones sitting around for 2 or 3 months, but the homes that just came on the market where you get the most activity, open houses have been good. I talked with one agent. There's a popular neighborhood in Southwest Austin called Circle C. And so it's very popular with families. It's a nice neighborhood. It tends to hold its price fairly well. Anyways, she had 80 people come to an open house. That's pandemic level number of people coming to an open house. That property is getting multiple offers in its first weekend. There are other properties that have been sitting around and they're not getting that activity. So again, we have kind of a dual market going on right now. Really interesting. So I'm watching this chart. I'm watching interest rates. When we get to March, which traditionally is when we see a lot more sellers come to market with their homes and get them ready, are we going to see those sellers? Those sellers might have to be buyers too. They may not want to trade their house and have to go get a 7% interest rate. So are those sellers going to come to market? There's always sellers that have to move. I've got listings coming up here soon. And so I'm really interested to see how these interest rates, we were finally getting some buyer activity. You know, January, February's looked pretty good so far, but is that really going to put this downward push on buyers and suppress them from kind of coming out in larger numbers? We're not going to know until we get to March and April. So one hand, the market's really good. On the other hand, I'm just nervous that those interest rates are going to keep putting downward pressure. If you are a seller right now, sales comps or sold comps are not really the best thing to look at. They're going to give you an idea of what the market's been doing. But really, January, February, most of those sales were done in November, December, and early January. The ones that we want to be looking at are active listings. If you are coming on the market right now, who are you competing against right now? Are you priced well? Do you look nice? Do we have the house staged? What condition are you in? Because that's what the buyer right now who has to go and get that interest rate is they're comparing you against. They're running their math with their lender and they have to see, can I afford that house? Is it the right price? So they're going to be using that to compare. If you are a buyer, again, if you're getting a loan, you're dealing with these higher rates. So more than ever, you want to have a really good relationship with your lender. I would lean on experience over rate if I was picking a lender today, because you need a lender that can help you navigate while you're shopping and going under contract, all your options to get the best way to position your loan. You might be doing a conventional loan, FHA, an ARM. You may need to be able to flex at the last minute if rates start jumping on you while you're in the negotiation process, because you can't lock in that interest rate until you're under contract. And so even though the lender's quoting you, let's say 688 today, and you go under contract on Friday, it's going to be a different rate on Friday. Could be higher, could be lower, but you need to have a really tight relationship with your lender. And so I recommend getting that relationship up front and forming that. Anyways, this is a lot of data to go over, and happy to talk to you in more detail about it. This is a good way to start the week. A lot happening. So far, the market seems like it's doing pretty well. We're having a good, warm spring market, but really waiting to see how these higher interest rates are going to impact buyers and sellers in the next 3 to 4 weeks. I'll keep you posted every week. Look forward to chatting with you this week, and take care.